All right, great. Let me get that out the way. All right, everybody. So today, obviously, as you can see on the screen, we are going to be covering the anatomy of a candlestick. So this should basically help you all with how to view candlesticks whenever you're trading. And so let's go ahead. So I'm going to give a disclaimer, as we always do. I am not a financial advisor, and this is in no way financial or trading advice. I am simply sharing option trading strategies that I use and have been successful with in the stock market. This presentation is for educational purposes only, and there are significant financial risks involved with trading. And I am not responsible for your losses in the market should you decide to utilize the information and/or strategies discussed within this presentation. So by choosing to proceed, you all are acknowledging your understanding of this particular disclaimer. All right. So let's get the boring stuff out the way. History of candlestick origin. So for some of you, this may not be boring, but Munichai Shoma, a rice trader, is regarded as the originator of the concept. He used candlestick charts in rice futures market, with each candlestick graphically representing 4 dimensions of price in a trading period. So basically the open, the low, the high, and the close. During routine trading, Homa discovered that the rice market was influenced by the emotions of traders. While still acknowledging the effect of demand and supply on the price of rice. Today, traders use candlestick patterns to indicate candlestick reversals, patterns which predict a change in price direction. A continuation pattern which predict an extension in the current price direction. The use of candlestick patterns are visually appealing and more comprehensive when viewing price action. All right, so on the screen, we have a bullish candlestick pattern. So let's just look to the left really quickly. So this is basically what price action represents whenever you're looking at a candlestick. Right here, you have where it opened, you have how high it went, you have how low it went, and then you have ultimately where it closed. So let's just say you owned a business, just to give you guys an example. Let's say you opened a business, or you owned a business rather, and the start of your day without any transactions, you started your day with $100 in your register, right? And let's just say you had customers to come in and they were to purchase a certain amount of goods. So that will bring you up to your high for the day, the amount of money that you had at the highest point of your day. And then let's say some people came in and they decided to return some goods. So it took you down into a negative. So now you are at a loss. And then after that customer who came in to return some items left, another customer came in and bought items to put you back into a positive. This right here would be a representation of that. So again, it's the low, it's the open, the high, the low, and the close. So when you look at a candlestick, that's exactly what it's representing. It's representing the start of your day, the highest points of your day, the lowest points of your day, and then it's representing the close. So that's basically how you would look at a bullish candlestick pattern or candlestick. Now, when you're reading a bearish candlestick, it's the same thing, but just in the reverse. You're going to be starting with your open at the top. And the reason why it's at the top is because you have to consider that when it's a bearish move, price has to fall. So it's falling from where it opened. So this is your open. This is how high it got. So this represents buying pressure. And then this is the low. So this represents selling pressure, but ultimately this is where it ended up closing. So if you guys understand that, put a 5 in the chat. All right, I'm seeing it coming in. All right, good. Okay, so now we're going to cover a few candles, and you guys, these are very important. This right here can be a bit overwhelming, but once you learn how to look at a candlestick, it will help you in your trading because you will be able to see who is in control based upon the interval of time that you're looking at. All right, so we have a shooting star candle. A shooting star is a bearish candlestick with a long upper shadow, little or no lower shadow or wick. You might hear it called a wick as well. And a small real body near the low of the candle. So a small body near the low of the candle. You may see hanging man candles within a continuation, but they are more significant at the end of an uptrend. So a lot of times I hear people say, this is an inverted candlestick, an inverted hammer. It's not an inverted hammer if it's at the end of an uptrend. That is actually a shooting star pattern. So it's very important that you all know the difference. Now, this particular formation is bearish because the price tried to rise significantly. So you see this large upper wick, it tried to rise significantly through the day, but then the sellers took over and pushed the price back down toward the open. Traders typically wait to see what the next candle or period does following a shooting star. If the price declines during the next period, then they may actually enter a position for puts or try to sell or short that particular stock, if that makes sense. Now, as I stated before, we kind of discussed the hammer pattern. Now, the hammer is going to be at the end of a downtrend. Now, just consider a hammer as something that you're going to use to build something up. So when you see it at the end of a downtrend, there's your opportunity to pay attention to that because you could potentially do calls. And again, a hammer is to build up. Now, a hammer candle is a type of bullish reversal pattern made up of just one candle and found at the end of a downtrend. You may see hammers within a continuation, but they are more significant at the end of a downtrend. So if you ever notice it at the end of a downtrend, that is where you can make the most money trading this particular pattern. The candle looks like a hammer as it has a long lower wick and a short body at the top of the candlestick with little to no upper wick. The hammer candlestick shows sellers came into the market during the period, but by the close, the selling had been absorbed and buyers had pushed the price back near the open. Hammer candlesticks indicate a potential price reversal to the upside. The price must start moving up following the hammer. This is called confirmation. A hammer can also be inverted at the end of a downtrend, and I'm going to show you guys what I mean by that. So it's a shooting star at the end of an uptrend. An inverted hammer candle is actually just turned upside down, but it makes it's more significant when you notice it at the end of a downtrend. Now you want to make sure that you're paying attention to where it is on the chart. All right, so let's get into a hanging man candlestick pattern. A hanging man is a type of bearish reversal pattern made up of just one candle and found at the end of an uptrend. Now that's very important. And to make note of the differences between the hammer candle and the hanging man, always remember hammer building up, hanging man, think of, and I hate this particular analogy, but hanging, think of a man hanging, it's dying basically. That's how I learned it. I hate to say it that way, but it'll stick if you just remember that. So with this candle, it has a long lower wick and a short body at the top of the candlestick with little or no upper wick. The candle has a small real body and a long lower shadow. There is little to no upper shadow. Now, given these two criteria, when a hanging man forms at the end of an uptrend, it indicates that buyers have lost their strength, while demand has been pushing the stock price higher on this day or this interval of time. There was a significant amount of selling. While buyers managed to bring the price back near the open, the initial sell-off is an indication that a growing number of investors think the price has peaked. So whenever you notice this at the end of an uptrend, typically it may start to decline. So obviously in the trading world, that would be a good opportunity for you to enter puts. All right, so just looking at the difference between the two, this is the hammer at the end of a downtrend. This is the hanging man at the end of an uptrend. So location on the chart is very important. All right, so this candle right here, when we see this candle, we get excited because this means that we're making money if we're in this trade. So a Maribozu is a Japanese word meaning dominance. This is an extremely powerful candle that consists of a long body with little to no wick. When a green Maribozu candle is formed, it means that the stock opened at a certain level and kept rising without collapsing or falling within itself. When a red Maribozu candle is formed, it means it opened and kept falling without rising. This candle can be both a reversal or a continuation candle. With the Maribozu candle, the higher the volume, the more powerful the candle becomes. All right. Now, this one is one to keep in your trading arsenal. If you see any type of doji candle, please, please, please pay attention, because 9 times out of 10, the candle that follows a doji candle is going to show you who won the fight between the bears and the bulls. So let me just explain. A doji means blunder or mistake, referring to the rarity of having the open and closed price be exactly the same. So sometimes on a chart, this may actually look black. And the reason why is because the open and close is relatively the same. So when you think about it, that means there was neither any, the bulls didn't win nor the bears won. The high and the low is relatively the same in length. So this would basically be a common neutral doji candle. So it represents a tie or indecision. Some of the best trading opportunities will come into play once the dust settles, as many traders believe that the next candle that follows will show who won the fight. Even if the difference in the open and closed price is just a few ticks within each other, it's still going to be identified as a doji candle. So here we have the long leg doji, and it gets its name because it has a longer lower wick than the higher wick of the candle. And this candle consists, well, basically, I covered that. So the pattern shows indecision and is most significant when it occurs after a strong advance or decline. The long leg doji is shaped in the form of a cross. Both top and bottom wicks are long and of approximately equal length. It indicates that neither the bears or bulls have had their say and therefore denotes a situation of uncertainty with respect to the market. All right, so obviously I had that wrong. So it is the same length, okay? Or it can be, but whenever I see it, you guys, to be honest with you on a chart, whenever I see a long leg doji, it's longer at the bottom than it is at the top still. All right, now we have the dragonfly doji candle pattern stick. And I just saw this on a chart. I have to make a note of it and I'll put it in the community so that you guys can see it live. Now the dragonfly doji has no real body with a long wick to the bottom. The top wick is either small or absent, and the large bottom wick is evidence of rejection or lower price in favor of higher price, and therefore can denote bullish market sentiment. In a dragonfly doji, the bulls prevail, making it a bullish candlestick. Given the bullish implication of the dragonfly doji, it can only logically reverse on an ongoing downtrend. So this one, whenever you see a dragonfly, it's typically at the end of a downtrend, indicating a reversal to the upside. It is also very important to make a note that the dragonfly doji makes for better reversal candles on an overextended dump or downtrend. So if you see something has been dumping for a while and you see this particular pattern, please pay attention because that can indicate a reversal. If a dragonfly doji is found during the early stages of a downtrend, it may just signify a short pause. So you obviously, again, you want to make sure that the downtrend has been happening for a while, or it also indicates that the relief before the trend continues down. So if you notice it in the middle of the beginning of a downtrend, you may not want to just focus on it that much. If a dragonfly doji appears in a bullish uptrend, then it's a strong sign of possible continuation to the upside. The gravestone doji, and as you can see, they basically look the same, right? But again, everything matters where it falls on the chart. Now, the gravestone doji is like an inverted dragonfly doji, and oftentimes it occurs at the end of an uptrend. It has a long wick on the top and no real body. The bottom wick is small or absent. The large top wick represents rejection of a higher price in favor of a lower price and can therefore denote bearish sentiment. By simply looking at the image, we can derive two things from this story, or three things from this story. So one, the bulls were able to push the price high. The bulls were not able to maintain the price at that high level. The bears were able to push it further down near the opening. So that's what you can gauge from this particular candlestick. All right, so it's a very bearish candlestick pattern. So looking at the two of them, very much the same. It just depends on where they are on the chart, and just the gravestone doji is just inverted. So always pay attention to where things fall. Now we have the bullish engulfing pattern. Now this particular pattern is very simple. You're going to have a small preceding candle, a green candle, obviously, followed by a green candle that engulfs the entire body of the previous candle. Okay, so this one is very, very simple. So the bullish engulfing candle appears at the bottom of a downtrend and indicates a surge in buying pressure. The bullish engulfing pattern often triggers a reversal in trend as more buyers enter the market to drive prices up further. The pattern involves two candles with the second candle completely engulfing the body of the previous candle. Now, the way to trade this and the way that I trade this is I weigh this against an oversold RSI or the MACD line crossing above the signal line. So if you see these three things together, that is a real true money maker for you. The same thing for the bearish engulfing pattern. You're going to see a green candle, a smaller green candle, followed by a red engulfing candle that completely engulfs the body of the previous green candle, and it happens at the end of an uptrend to signify a downtrend. It's essentially the opposite of the bullish engulfing candle. Instead of appearing in a downtrend, it appears in an uptrend and presents traders with a signal to go short, so buy puts. It is characterized by a green candle being engulfed by a larger red candle. Weighing this against an overbought RSI or MACD line crossing below the signal line for higher probability setups, this one would be golden for puts as well. All right, so we have the morning star candle, which forms following a downtrend and indicates the start of an upward climb. It is a signal of a reversal in the previous price trend. The first candlestick is bearish. The second candlestick has a small body. It does not matter if the second body is bullish or bearish, although in a bullish body with a small or no upper wick candle indicates more bullish power. The small body serves as an indicator that the bears are losing their capacity to drive the market lower. It is also possible for the second candle to have no body and be a doji candle. Now, the third body is bullish that closes within the first candlestick, preferably beyond halfway, the halfway mark of the first candle. This shows that the bulls are gaining control. So that's a morning star. So think morning, think rising, think about waking up. That right there is going to indicate an upward trend. Now we have the evening star, which is that in the reverse. Think of going to bed, think of it falling. The evening star is a bearish counterpart of the morning star pattern. The evening star is a reversal pattern and appears after an uptrend. The first candlestick has a strong bullish body. The second candlestick has a small body. It can be bullish or bearish. It is also possible for the second candlestick to have no body at all, just like the previous one. The third candlestick has a strong bearish body and closes within the body of the first candlestick, preferably beyond the halfway point, okay? Now, keep in mind that with the morning star and the evening star, it all matters where it falls on the chart. That's the biggest thing. All right, and I think this is the last one. The harami candles would be the last ones. The harami is a type of Japanese candlestick pattern represented by two bodies. The first of them large with a black or red body, and the second one, we're not going to say white or green. We're just going to say red or green because, you know, in former times they were using white and black candlesticks, but now we're using candlesticks that have color, so green and red. Its name derives from the Japanese word that means pregnant. So when you look at the candlestick, the reason why it's called a harami is because you see this large body. So think of this as a woman, and then think of this candlestick being the baby. So it's basically carrying a baby. A bullish harami is a basic candlestick chart pattern indicating that a bearish trend in an asset or market may be reversing. It is a two candle pattern starting with a long red candle, followed by a small green candle that does not break the high or the low of the previous candle. Now with the bearish harami, it's a basic candlestick chart pattern indicating that a bullish trend in an asset or market may be reversing. And the same thing, a two candlestick pattern starting with a large green candle followed by a red baby candle right here. And then that indicates a downtrend. So again, with almost everything else, it matters where it falls on the chart. Okay, so the bullish one is going to start at the end of a downtrend, and bearish is going to start at the end of an uptrend. Now, I also put on here, just for you guys who are going to watch this at a later time, I put a little cheat sheet, something for you guys to refer back to. I don't know if you guys can zoom in on it or not, But if not, you can always go online and search bearish and bullish candlestick patterns and just study that. Now, this is going to be great for you guys who are using indicators. It's going to be great for you guys who are using the strat, because when you think about it, if you're using the strat with this and then you notice these type of candlesticks on a chart, this is going to make your trading game that much better, because you're going to be able to see who is holding the buying pressure or who is holding the selling pressure just by adding this along with the strat. All right, so if you guys have any questions, Ray, how much time do we have left? I'm out of breath.
I don't know.
All right, we have about 30 minutes.
See.
Wait, were we doing a hard stop at 5:45?
I don't know. Probably. We'll see.
Okay. All right, so you guys, if you have any questions, let us know. Ray, do me a favor. Type your, if you don't mind, type your Twitch, type your IG if the names are different. Can you type all of that in the chat, please?
Fine. I will, I guess, for you. No, not for you, for the people. Sure. Hold on 1 second.
And then we're going to answer some of your questions. I just wanted to get that part out there. So obviously this is my, I put my name pretty much on every slide just because we have some information floating around in other communities. So we have to make sure that we do that. But here's mine on here, so I don't have to type mine into the community. And then Ray typed his social media handles in the chat, which is great because he goes live and he does a lot of videos to walk you guys through like some live trading for everyone that's new on here. So if you have Twitch or Instagram or Twitter, then it would be best to follow him there. And then I'm very active on Instagram. Don't really, operate on Twitter that much, but I have a Twitter. And so yeah, we're gonna answer some questions. So if you guys have questions, feel free to raise your hands.
All right. Eric, you can go ahead and ask your question.
Hey, blessings to you all and everybody on the chat today. Kay, congratulations on your recent achievement. I got a question. I don't know if you'll be able to answer it in this moment about using the ATR percentage to I guess choose your strike prices. Do you have any insight for us? That I guess time allotted.
Okay, 1 second. I do. All right.
Appreciate the love, Ray, too, on my Achilles injury.
Oh yeah, man, no problem, bro. Man, get well soon. I know that was like super serious.
Okay.
Trying to be too young.
I hope you feel better too with your Achilles injury. All right, so with the ATR, I am looking at the daily chart, right? Okay. And with the average true range, I'm just gonna hover over this candle right here. And also, Ray, make a note that MU ended on the inside day. So anyways, so as I hover over this one candle and I look to my left where I have the ATR indicator, so it's right here, you guys. So I'm gonna hover, but I want you guys to look over there, right? So this ATR is telling me that within a 14-day span or 14 trading day span, just depending on how your parameters are set up, that's how mine is set up. It's basically telling me that it has moved an average of $2.62, right? So what I typically do with my average true range, let's just say I'm looking to fill a particular a gap, or let's just say I'm looking for a particular move. So for example, from this point right here, which is 71.24 to right here. So let's just keep it simple math. Let's say I'm looking for this to do $1 move. I can say to myself, well, based upon what this is showing me over here, this stock has the potential to move at least $2.62 in a day. So if I wanted to take a position with the average true range, what I would do is I would look at, number one, how the contracts are broken up. Some contracts have multiple expirations within a week, like SPY has 3. Some of them have maybe a Wednesday expiration I've seen, or some of them may just have a Friday. So I would say to myself, depending on the day that I'm entering into this contract, how much time do I have before expiration? And can this stock make that move by this particular expiration date? So let's just say I wanted this to do, I don't know, maybe a $4 move. Well, I know that it can do that within 2 days. So what I would do is I would say, to give myself time, I would just multiply. If I want to play, risky, I would multiply by 3 or 5. If I was trying to, minimize my risk as much as possible, and I had a low risk tolerance, maybe I'm trading with a smaller account size, I would probably multiply that by 7 or 10. Now, the good thing about that is it's going to give you a lot of time. But not only is it going to give you time if you're going to go for a longer expiration, it's also going to cover you or potentially cover you if there are any reversals. So let's just say some news came out and it fell. You have more time to recover. And typically with longer expirations, you have lower theta decay as well. So when I'm using my average true range, I'm using it to say how much can it move per day. And you can also do the same thing per week when you're looking at the average true range. If you're trying to, maybe play weekly, well, not weekly, longer term expirations, right? You can see over here, if I hover over this candle, you can see that it pretty much moved about $6.71 in that week alone. So you use those average true ranges to see how much the stock has the potential to move, and that can help you to pick your expiration, and it can help you to pick your strike price. Does that make sense? Can I get a 5 in the chat?
Yeah, appreciate it. And so just to carry on with that, are you, I guess, weighing the previous candles, previous weeks or previous day candles as well? Or are you just going off that recent candle?
I'm going off of recent price action. Because it's gonna give me, as each new candle forms, it's going to take a new average over the last 14 days.
Understood. I appreciate y'all.
No problem. And I say, hey, what a wonderful time today, where you can learn to work and play. All right, we got somebody else, Ray?
Yeah, Max Cadet.
Yes. I had a question. If there's a consolidation candlestick before there's a reversal, does that candlestick pattern still apply?
Yes. Well, wait. Let me not say yes. Does what candlestick pattern apply?
Well, for example, for anyone like say like any kind.
Consolidation is sideways action, so I could see how. Yeah, I would assume. I would say yes, it still applies, because no matter where the candlesticks that I just showed you are either going to be bearish or bullish, right? So if it's consolidating, it's basically trading sideways. So let's just say it's trading sideways at the end of a downtrend, or it's trading sideways at the end of an uptrend. I would say yes. It still qualifies, because it's still consolidating up one way or down the other.
Okay.
Mm-hmm.
Thank you.
No problem. And the longer something consolidates, you guys, the bigger the breakout is going to be. So always remember that. Like, some people hate consolidations. I hate consolidations if I'm in a trade, because that's just eating away at my contract. It's just theta decay. I'm just losing money just from holding, and it's not making too much of a move. However, if you're someone that were able to get into a trade, like once something is breaking out of a consolidation and it's been consolidating for a long time, the bigger that move is going to be.
iPhone, you can go ahead and ask your question.
So I was just gonna say real quick, with the time charts for each candle, what should we focus on? Like a 4-hour chart, 15-minute chart, you know what I mean? Like, is there a specific one?
Time frames that you're going to look at is going to be contingent upon your plan to hold. So for example, right here, we have this in Market Facts and Resources, you guys, where you can pretty much just, if you're a long-term investor, these are what you're going to look at. If you're swing trading, these timeframes are what you're going to look at. And if you're day trading, these timeframes are what you're going to look at. So it's basically going to be contingent upon your plan to hold.
All right, thank you.
No problem. And that's it. Why is it stuck in my head?
All right. Any more questions? Also, make sure you check research admin. Me and Kay both put something in there today.
Ray, what you got? I know
What
you
you
got
mean what I
something
got?
good. I know you have something fire that's just gonna run tomorrow. I can feel it. No
Yeah,
pressure.
probably my stomach.
If you guys have any questions, let us know. This is your time. You know, it helps us for you guys to answer it here, especially because we don't have to type it out.
Pamela, what you mean? How do you get time frame continuity? You talking about the indicator on TradingView? Just type in time frame continuity. It's by board writer B. Yep. What's your question, bro? Yep, tastic.
What's up with y'all, man? My question is in regards to the numbers under the candlesticks. I believe somebody else had asked what those meant. And a lot of times I hear you say 2-2-1 reversal or 3-2-1 reversal or something like that, but I'm still kind of lost on what those numbers signify. Did you hear me?
Yeah, we can hear you.
We can hear you.
I literally just posted.
Yeah.
In stocks and stuff, like that's the strat system. So the one signifies a consolidation. It's an equilibrium between buyers and sellers. It doesn't break the high or the low of a previous candlestick. All right.
Okay.
Your 2 candle is either going to be a 2 up or a 2 down. A 2 up, well, K is on the 2 down. A 2 down breaks the low of the previous candle, and a 2 up breaks the high of a previous candle. It doesn't matter what color it is. All right.
Okay.
And then your 3 takes out the high and the low of the previous candle. It's an engulfing candle. So it starts as a 2 in one direction, fails, and then takes out the other side of the previous candle. So on the 3 that she's looking at, it was a 2 down. It failed to poke lower, and it came back and went 3 by taking out the high.
And again, it doesn't matter what color it is.
Correct.
Mm-hmm. And there's resources on that, and there's resources on that in Market Facts and Resources as well. A lot of stuff, you guys, if y'all could do us this favor, we have a resource channel, and it's legitimately packed with a lot of stuff that we get asked. It's videos in there. There's videos on how to utilize your brokerage. There's a lot of frequently asked questions, and we put like blood, sweat, and tears actually typing that stuff out in a way as if we were having a conversation. So a lot of that stuff is in the Market Facts and Resources channel. If you want the strat, which is what the gentleman that just spoke was talking about, that's in Market Facts and Resources. Just look for the strat, and it's going to have pretty much a playlist for you.
All right. iPhone, you can go ahead and ask your question.
All right, 2 questions real quick. So the first one is so like Sense and Bio, ticker symbol SESN. Do y'all think like that's gonna do something like within this next week, or do y'all feel like that's a dead move in terms of just like options plays? I know there's gonna be heavily volatile, potentially. So you guys feel like that's a move for this week? And then the second question was, did you say that the strat thing was located in the Market Resources? And if so, like, is there a way to like, do I have to scroll up, like how far, like, or anything, like how far into the chat is that?
Have you went into that channel? Because it's not far.
It's not, yeah, no, I'm new to it. You feel me? So like,
yeah, it's literally like just click in there and you'll see it. Like you probably don't even have to scroll twice. It's right there.
it's right there. I bet. And then the first one, Sense and Bio, do y'all think that's gonna do something tomorrow?
I personally don't know. I don't trade Sense at all. It's not on my go-to watch list, so I don't look at it.
Sure.
What's the ticker?
SENS.
And you guys,
SENS. It's SESN. It's the one that went from like $5 to 87 cents in like 10 minutes. It dropped. Volume was like 140 million or something like that.
And you guys, we don't typically and I'm not trying to be rude, just trying to be like realistic, because we have like 30,000+ people in the community. It's very hard for us to like, because if we go over one ticker for somebody, then everybody wants you to go over a ticker, and there's just not enough time in the day. This completely gapped down, and it appears that it's in almost pretty much full-time continuity to the downside. So we can't say what it's going to do, but right now I would just say they bought it up, they sold it down, so you're really just going to have to see what happens tomorrow.
Oh, for sure. Yeah. All right. Thank you.
Mm-hmm. Ray.
Max, you got another question, bro?
Yeah. Hey, Curly. When you are trading, I know you use TradingView to view your charts, and you use Webull. So do you do like TradingView on a laptop or PC and the Webull on your phone, or do you also use on the desktop as well?
To be honest with you, I trade off of my phone.
Okay.
I very rarely trade off of anything other than my phone, because I'm always doing something, and so it's so convenient to have my phone. And I always chart off of my laptop. I don't like to chart off of anything but my laptop. I don't even like to use my MacBook to chart. I like to use an actual laptop.
Okay. All right.
Yeah.
Thank you.
No problem.
Ronald, you can go ahead and ask your question.
Hello, how you guys doing?
Fine, how are you?
I'm doing pretty good. I have a few questions about stop loss, because I kind of understand what stop loss is for, but a lot of times I don't understand how people set up stop loss.
Okay. What's
Could
your
you
question?
yeah, my bad. Could you show me how to set up stop losses?
Ray, can you?
That's going to be based off of your brokerage. So that's going to vary on what brokerage you actually use.
I use Thinkorswim.
Oh, I don't use Thinkorswim, so that would be Ray.
Yeah. All right. Hold on one second.
Did you do a video on it? I think you did.
Nah, that's just in my course. I haven't did a video on it, but like there's like plenty of videos on it and on YouTube, but I'll pull up my Thinkorswim real quick.
Okay. While you're doing it, I don't know if the gentleman that was on a previous class, we were talking about edit. I don't know if he's on here, but if you are, please say something to the community, because I told him that edit was going to squeeze, and edit, what's past tense of squeeze? It squoze. And we should have gotten it, Ray. And I really was not even watching it. It definitely just ripped to the upside. And now it's reversing. And this is going to squeeze too. Mark my words.
All right, so let me share this screen.
Okay.
Screen 3. All you would do basically, if you want to do it advanced order, you can, but I would just, after you buy your contract, you basically would just come here to limit, and you would change it to either a stop or a stop limit. A stop basically would just, it would fill at whatever price you wanted to. And a stop limit would be, it would fill at the price that you wanted to. So basically, like if you bought this for 236, you would want your stop potentially to trigger at 220 when the price gets to 220, and then the limit order, you might have it set at sell at 2.18, and then you just click confirm and send. Literally that simple. Like,
Okay,
except for
cool.
I don't do mine on desktop. I'm like, okay, I do all my stuff on my phone. So, and I don't do stops myself. I just do it myself, like manually. I don't set stop limits because I'm able to watch the chart.
Okay, facts. That's I pretty much do it myself manually too. I just wanted to see if that was a good thing for me to be able to set up for myself personally, but manually sounds like the way to move anyway.
Yeah, the only thing I would probably recommend is for the people that want to do like trail stops, like for it to trail a certain, instead of having a plus or minus sign, you would change it to a percentage. So if you wanted it to trail, 20% or 10% because you want to go use the bathroom real quick, you don't want to miss out on profit, then you could do like the trail stop that way and then just have it sell at market.
Okay, facts. Thank you.
Yeah, no problem. So I can't really see much right now. So let me stop my share. All right, cool. Where's the hands? Oh, okay. There we go. All right. Edwards. My bad, bro.
Yeah. How's it going, guys? Thank you for the info.
Yeah, no problem.
Appreciate all the help. Yeah, I just wanted to ask, like, how much or how volatile a ticker has to be, like, in order to determine, like, you got to get in, or you got to the watch list, and you say this is the stock that might move today. Like, how what's the range or
that's gonna be different from each stock. Like, for instance, like a lot of times we go off like ATR, but like, for instance, like eBay Friday moved well and above beyond its ATR, and I think it moved the most it's ever moved in one day, which was like $5.65 or something like that. So like, we don't really know. And for me personally, I don't go about like predicting. I just say if it breaks the high, I'm in. If it breaks the low, I'm in. I don't really go about necessarily predicting because it's impossible really to predict the market.
okay. But like, is there like any like volatile tickers that they are like like they are daily movers, like they go up and then they might go down, or like, you know what I'm trying to say? Like,
I get what you're saying. There are a lot of stocks that have volatility, but what you might want to look at is stocks that are trading with higher volume than usual. That might
okay,
be a good starting place for you,
okay,
to just look for stocks that are trading with larger volume. Volatility can be tricky because as soon as, like, if you're looking for something that's extremely volatile, then you have to understand that that means it goes up really quickly and it can reverse really quickly.
right.
So yeah, I don't know if that's what you're looking for, but you
So the
Mhm.
yeah, the volume should be like the main thing to look in the stock, like the first or one of the first things.
Yeah, you want to look for stocks with good volume. Hey, Ray, let me kind of sound slow. I'm gonna share my screen. Okay. Had to bring it back a little bit. So I'm going to share my screen really quickly, and I'm going to show you a really quick little thing that you should do. Are you using TradingView, stock charts? Because I use TradingView, I don't use stock charts. So hopefully stock charts offer the same thing. Is he there? Are you there?
Edwards.
Yes, I use Thinkorswim, but I don't use like a charting site.
Okay. Well, I'm sure there's a way to do this on there. Ray probably has something touching on this in his course, but hold on, let me just show you what I mean. So I'm using the relative volume indicator, right? So I can actually use my relative volume to look to see like what the average the stock normally moves volume wise. You can also look over here to look at the average volume and stuff like that. But if you're seeing a stock,
Are you sharing your screen?
I think I am.
No, you're not.
Oh, my bad. Rewind. Let's try this again. Okay, there we go. All right. So I'm using the relative volume, right? And so this basically will let me know like how the stock is actually moving in reference to volume, right? So this right here is showing, you know, my average line. It's whenever I see it break above, that's letting me know that it's moving with larger volume than usual. You can always look over here at your average volume as well, just to see what the average that it normally trades in. And another cool thing that you can do, hold on one second. Pulling up a different type of chart. All right, let me just go to something that's going to look like what I need it to look like. Okay, and so here is something that I told, you know, a lot of newbies in the community to do too. This is what TradingView automatically gives you. It automatically will place volume on your chart, so you don't actually have to search for the relative volume. What you would do is you would click on this little settings wheel, and then you would go over to input. No, actually it's right here in my face. So right here, it normally doesn't have that checked. The volume moving average, it normally doesn't have that checked. So you can actually click on that and it'll show you like what the stock is doing in relation to volume, right? So if you look over here, it's kind of trading with low volume, but it's still moving. But if you look here, like it's trading with extremely high volume because it's breaking above this line. And as you can see, it did a pretty good move following that. So that's something good to have on there. And even right here too, it did the same thing. It broke above this line. And as you can see, it caused it to kind of like run. So you may want to look for something with good volume versus volatility, especially if you're new to trading. Because just as quickly as you can make the money, you can blink or go take a shower and you may have lost it. Ray, what you got on that topic? Nothing?
Nothing.
Okay.
Edwards, you got that? Edwards.
Yes, totally. Thank you very much.
Mm-hmm.
No problem. Joe's iPhone.
Hello, anybody?
Yeah,
Yeah.
Oh. So on that, I think it was on edit when you was like, we should have hopped in, but we missed it.
Mm-hmm.
What kind of reversal was that at the top right before it started reverse?
Look at you already studying. Hold on. Kind of like that a little bit, I must say. I'm on the weekly. All right.
It was on the
So,
daily.
oh, okay. Well, let's start on the weekly too, because I see something and I want to see what y'all see. So what do we have on the weekly? What do we say happens at the end of an uptrend? Long upper body, upper wick rather.
Reversal? A shooter?
Okay. Could be. Not really. I don't like it. Let me see. Could be a shooter. Now, were you talking about this? Because this is a shooter. Were you talking about on the daily chart?
Yeah, I was.
Okay. Ray, that looks like a shooter to you?
Which one?
Right here.
The green candle?
Yeah.
Zoom in on it.
Talk to me nice.
No. Yes,
What
that's
else?
a shooter.
What you said?
Yeah, that's a shooter.
This one is a shooter followed by a downtrend. So for those of you who are using the strat, remember I told you, if you know these candlesticks, it can actually step your game up like that much more.
Yeah, because the shooter's in the strat.
I know.
Exactly.
But I'm talking about other patterns. I almost called you something else. I'm talking about other patterns. So like knowing these other candlesticks and things like that, that'll help you. Shooters are in there. The hammer is in there. But if you can understand those other patterns, it'll help you to understand where the buying and the selling pressure is.
Joe, did that answer your question, bro?
Oh yeah, it answered my question.
Do you have another one?
He trying to see if this thing gonna fall so he can catch on.
I'm good.
I'm not mad at you.
I'm good.
It might go
Appreciate it.
back up tomorrow.
Let's see.
It got time frame continuity. It may come just a little bit lower.
Yeah, that's what I'm thinking because it's 3-2. Let's see what happens. Let's see if it does 3-2-2 to the upside in the 4 hour. But it is, yeah.
Yeah, probably just a pull back to keep going. A little TTO action. Anyways.
Let's watch it. I'm curious now.
Joe, was that it before I go to the
Oh yeah, that was it for me. I'm good.
Okay, bet, bro.
Appreciate
it. Oops, my fault, bro. But yeah, you're welcome. There's videos literally on the strat that explains time frame continuity. Nolan, what's good, bro? What's your question?
Thank you so much for the lesson and just taking the time to teach us. I just have one quick question. Can you hear me?
We can hear you.
Perfect. I just want to know, what are the advantages of using a specific charting tool? I'm not sure the tool that you're using. I know that Chris had talked about startcharts.com using the actual built-in brokerage chart. Like, what's the advantage of using one charting tool over another?
I would say it's just mostly preference. You know what I mean? Like with everything, like if you were to go to a bank, like there are certain people who will only bank with, credit unions, and there are certain people who will, only use specific types of banks. It's all about what you need and what that particular platform is going to offer you, like the ease of use and the interface, and you know what I mean? Like how much you can view on a chart, if you can split your chart in half, if you could enter and exit, positions from, your charting platform. It just depends on how you like to view your particular chart.
Okay, so as long as you have the fundamentals, you understand how to read a chart, it just boils down to what looks better to you. It doesn't give you, like, one chart doesn't give you something that another chart wouldn't give you, more or less.
I won't say that, because that goes back into what I'm saying about it just depends on what you need, and if it can give you, if one particular charting platform can give you that versus the other one. So it's all going to come down to what you need to view on a chart and whether or not that's offered. Like I like charting and trading view. I know that Ray uses you're using Thinkorswim to chart now, Ray?
Yeah,
he's using Thinkorswim to chart now, because when some of the stuff that he does, like it may not show up the same way on trading view, so he's using it out of his brokerage, and it's easier for him that way.
Got it.
Yeah.
Okay, perfect. You've answered my question. Thank you so much.
No problem.
You're welcome. And last question will be iPhone. What you got?
Y'all can hear me?
Yes.
Yes, sir.
All right. I want to know, like, what's the way y'all remember everything, like all the patterns? Like, y'all got like a studying strategy or something like that? How y'all remembered it?
Yeah, I make things funky. Like I do a lot of things to help me to remember stuff. Like, and I was also taught that way too, and that's how I learn as well. So if it's something that's really hard, like I try to associate it with something. So like, for example, when I was doing the candlestick patterns and I was talking about like the hammer candle, to help me to remember that it happens at the end of a downtrend, I had to say to myself, well, think of what a hammer does. You use a hammer to build something, build up. And like I associate things in that way so that I can remember it. So you might just have to make it funky and figure out little ways to help you to remember things.
All right. I appreciate I appreciate what y'all doing too. So I just want to put that out there.
Thank you.
No problem, bro. Appreciate it. All right, well, we'll get Edwards. This will be the last one.
Okay.
What you got, Edwards?
Ray, this question is for you. Like, I trade in Thinkorswim, but like my chart is delayed. Like, I think it's like delayed like minutes or so. Like, I don't know exactly how, but I don't know if I can like set it up or would I have to, like, is that normal, or how can I do like to be like on the same? Because like I look at the chart and it's a different price. And when I go to the stock price itself, it's on a higher price or a
Go,
lower, like it's delayed.
go to setup, click on setup, go to application settings. All right, this is gonna pop up. Go to system, and then quote speed, change it from whatever it's at to real time, no delay. And
Okay.
then click apply settings. And that's it.
Okay, thank you, Ray. Appreciate it.
Yeah, no problem.
Hey, Ray.
Huh?
One other thing. Put the link to your Thinkorswim. Well, it's not just Thinkorswim, you guys. He helps you to go over multiple brokerages. For those of you who are like trying to figure out Thinkorswim and Webull and things of that nature. So he offers a course on that. Can you put that in the chat?
All right.
Yeah. And then can you put mine in there? For anyone who's new on here, you guys, we have these courses every Sunday, with the exception of holidays, obviously. So we do these courses, so you guys can always go into Wealth Squad University within the Wealth Squad. However, if you're looking for something that's like a one-stop shop, right? And you're just wanting to learn everything in like one sitting, come back to it, pause it if you need to and come back to it. I offer a course as well. For the members of the Wealth Squad, the course is $35. And it teaches you about options. Ray just dropped the link in there. And then Ray's course, again, it's going to teach you how to function within these particular brokerages, because what we find is that a lot of